answer all the questions, be teacher's pet. Yeah, because we're going to be going out across all platforms. I mean, it's something that we tried before, but now we've got the platform up on certain things. We're just putting everything in place. Like I said, there's a few loose ends to us doing
Mm.
certain things that have been getting tied up, but we're getting it, all right? So, but either way, this let's go to our Dixie. These areas, this liquidity and these imbalances are predominantly how we trade. Now, what I wanted to do today is I wanted to back test, okay? Because I don't believe that enough people here on the call are back testing. Yeah, because what back testing is going to do is going to give you the confidence of seeing when trades take place, when and why and how and what and the different markets. So say for example, there's somebody here and they trade. I'm going to do something on a different chart. I'm going to do it on, say, for example, US 30. Yeah. Or let's go NAS. It doesn't really matter. Yeah, it don't matter. Let's just go NAS 100 USD. Okay. Now, this is what needs to start happening on a regular basis. And when I say regular basis, let's say weekend. Okay. Let's say the weekend is a time when I think you lot should be doing this. Yeah, so you just, you've had a nice weekend, you've gone out, done your shopping, might have had something to eat, and then you've come back home, you're relaxing, you've watched everything on Netflix anyway. Yeah, there's nothing that you haven't seen on Netflix. And then you open up your laptop whilst you have a glass of wine or whatever you're doing at home, and you're going to go and you're going to backtest. Why? Because the Forex market's closed anyway, futures market's closed, and you're just looking and you're trying to, build your muscles. Yeah, you're trying to see what's going on. So if I was looking at NAS, we can see the NASDAQ, for example, has been this. I'm on a 4-hour chart at the moment. Yeah, or you can even go on a daily. All right, but let's go on a 4-hour just to get a little bit more detail. We can see that NAS has been bullish, making higher highs and higher lows and higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. Then we made a higher high, then we made an equal low, then we've been going sideways. So here is a level of sideways energies. You have to understand the different phases of the market, the different cycles, bullish, bearish, um, and sideways, consolidating, accumulating. All right. Now we understand that below any one of these 4-hour lows, daily lows, any swing lows, there is something that we call liquidity. And the markets are drawn to liquidity. Yeah, every single time, if we look in here, look, and we try and identify these, previous little levels, okay? Every single time these previous little levels are taken, we see a reaction, yeah? Even if we want to turn around and say, here was a little bit of a low. When that low was taken, we see a reaction. We like if we want to turn around and say whenever, especially depending on which direction the market's going, because the direction the market's going means that every time imagine the market's here making some bearish energy, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Yeah. We might as well say that every time those lows are taken, we see a reaction. Then when we see those lows are taken, we see a reaction. Yeah. When we see those lows are taken, we see a reaction. Okay. Now, that's just liquidity. And that's just the market moving in waves. Does that help us immediately of how we're able to just trade these markets? Well, yes and no. Yeah, because remember, how we're able to trade these markets also depends upon when we're at the charts and what kind of time frames we're looking at. So now, because of the time it is, when we're looking at these charts, we want to understand that there are certain sessions. Now, within those sessions, there are certain characteristics of the sessions. Typically, US stocks, anything with a USD in it, or US indices, typically in the Asian session, yeah, we have low volume. Okay. So this is Tokyo session here. Can you see all these little candles? Low volume. This is late Asian session here. See all these little candles? Even though it's still moving, but still low volume. Let's keep going back testing. Here we see some little, can see a little bit of movement to be here. Yeah. But typically we see low volume. And if I, what should I do? Let me do another chart that's a bit more familiar. Yeah, let's go to just GU. And just because we're going to probably take a GU trade in a minute. And then we do the same thing here. And this is GU. You know, we typically see low volume. Now, we use the Asian session to frame what we may do. Why? Because we've just woken up. Here, look, we've just woken up. This is 7, should be 7 a.m. All right? Should be 7 a.m. Yeah. This is saying 8 to 10. Yeah. All right. See, it's 230, 140. Yeah. Either way, even when we draw these things, we're still looking at that range. So ultimately, we are using these sessions to frame what we may or may not do. Okay. Now, we have one playbook that we have is that when session liquidity is taken, we look for change of characters to potentially trade in the opposite direction. However, I'm going to say to you that this must be in context of which is the overall direction of the market. So I'm going to grab some context. Yeah. So I'm going to go in here. I don't want to go too far, but I'd like to grab this context here between here and here. All right. This is between the 23rd of March and 30th of March. Okay. Now within that time period there, we can see if we go to whatever our 4 hour or our hour, you can see how this market is that coming back in? There you go. Is, you know, making lower lows and lower highs in this little scribble here. Yeah, if we go to our line chart, we can see lows and lower highs in here. All right. It's accident. Yeah. So we're looking just in here in this little block. Yeah, I'm going to try and do some back testing just in here. Now, if we drop down, we want to see our sessions. Let's go back within our yellow lines. We are understanding that the market has some bearish momentum. We're going to start right over here, our first block. Bearish momentum. Yeah. And the market has come up to a level, swept some liquidity. Have a look at liquidity. Okay. Make that a daily high. Oops. Daily high. And swept that liquidity. Do we all agree? Let's get some energy. Say me, yeah, we agree. Daily highs have swept that liquidity. Happened in New York. Okay. And then the market, New York, started moving down bearishly. Yeah, so maybe this here, sweep of liquidity, wick rejection. New York moved immediately from that. If you're trading a US pair, which is GU, in New York, you're getting this big volume. Okay. And then the market makes a retracement. The market's moving waves, but this is a lower high. Then we've seen in Asia's session, it frames what may be happening. And based upon the fact that I live in London, live in the UK, when I wake up, the opportunity that's presented to me is I understand that that frame of Asia's session high, where liquidity, which is what we understand can move the markets, was taken in London. Nam, 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 nam. I'm going to draw a little circle around here. Nam, 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 nam. So we understand that that for us becomes a trigger. And within that circle, we look for an entry model to be able to trade in the opposite direction. Where to? Can somebody tell me where to? Where do we trade? We take the session, the trade from that liquidity high. Where do we take the trade to? Where's the target?
Structure.
Structure, yeah, we can say structure. What do I want? Obviously, a simpler answer than that.
Or the opposite, liquidity.
There you go, opposite liquidity. So in this example, here is where we've taken our trade, and we was targeting the opposite liquidity. Yeah, this is me zoomed out. I'm in the 15-minute time frame. So in the 15-minute time frame, just dropping this in anywhere. You know, maybe that's a 1 to 3, 1 to 4, 1 to 5 around that kind of trend. Now let's zoom into this circle. Because on the 15-minute time frame, we're not just going to hit the button here. We're not playing Atari. Okay, we don't just hit the button. That's not what we're into. We want to refine that because we're back testing now, and we want to be able to see how it is that we are able. Where is it? Where is mine? Oh, here we go. How it is that we are able to get into the trade. Bearing in mind, we are just looking at this live. Yeah. So it's not something I've made earlier and I've come and tried to do this. Let's put this date and time in here. March 24th of March at 7:20. So let's go and put this in our calendar. We're gonna go 24th of the 3rd at approximately 7. Why can't you go to the toilet? But he's already showed you. You don't need to tie that in a knot. That's fine like that. All right. So yeah, so if we go here, we can see that here within this time frame here is when that liquidity was swept. Let's see on a 3-minute time frame if we have an entry model for us. All right. Look in here. Do we have an entry model for us? Doesn't look fantastic on a 3-minute time frame. Let's drop down to my 1-minute time frame. And let's go here. Let's do this. Annoying, all right? So I went a bit too far back for this example. All right. Now, what I'm going to say to yourself is, I believe that there is an entry model here on our 1-minute time frame in here. And that was the correction. And that was the continuation. You're just going to have to trust me. All right. That there is a 1-minute manipulation pattern in this spike here. And that market tapped in and closed down. Now, what I'm going to say to yourself is this: what's beautiful and what's great about GU, let's imagine that there isn't a clean entry model here within this area. We have the ability to use what other pairs can we use to see if they're going to give us a cleaner entry. What other things can we use? What other pairs? Let's go. I'm asking questions.
EU.
Use EU. EU is its cousin. EU might look a little bit better, all right? And have a very clean, lovely manipulation pattern here. I'm going to try, and we're still not going to get the data, unfortunately, because it's how far it's going back and the account I have here with TradingView. But I'll tell you what I am going to do is I am going to come over here and we're going to go and look at my source of, not my, I want to say my source of truth, but we're going to look at something that makes sense to me, that I make sure I have a good understanding of it. Yeah. And that's going to be my MT5. Okay. So if I go to my MT5 here, and let's just make sure it's different resolution. So it's on my other screen. Let's go here. Let's go here. This is my MT5. All right. So we was looking at GU, and we was looking at GU at the date was the 24th of March, I think, off the top of my head. Okay. So we're going to try and go back GU, and we're going to find 24th of March here. Okay. We're going to find the 24th of March. Let me delete everything off my charts. Control B. Oh, where is the option gone? Oh, wait a minute. I hate when this does this. Let me close this window. Give me a second. Sometimes this does this whereby the pop-up of the has popped up behind the screen. I think it always happens when I'm sharing the screen. Give me a second. Let me close this down and open it back up. Give me a second. It's a bug. It definitely happens in my MT5. Where is my MT5 for me to close it? Oh, 1 second, guys. There you go. There you are. You just end it. Great. And let me open it back up. Because I don't know why that little pop-up window for me to delete all the tools, it pops up behind the screen and I can never find it. That's why you hear me every time it clicks. It kind of goes daloom, daloom, daloom because it's basically it's trying to click and the account it's trying to click it and it's not there basically. All right, so let me close this. A small window. Let's go back to our GU and let's go back to the 24th. go back to 24th, around about here. And it was, remember, our server time on our MT5 would probably be different to our time because the server time for a lot of our brokers are in different jurisdictions. Like, say, for example, here, can you see it at the bottom of my window? It says it's 10:45. Well, it's not 10:45 at the moment, is it? It's 8:45 in the UK. So that shows me that my server time is 2 hours ahead. All right. So we're going back in here and I'm going to find the 24th of March at 7:20. Okay. Which, because we know that that's 2 hours ahead here, I'll go and find the 24th here. 24th here. Around about here. So we're talking about this little area in here. Let me just put an arrow so we know where it is. Here. Okay. Okay. So let's drop down to our what was we saying? 1 minute. So we couldn't get the information before. And let's go and see. Don't know why my scroll is not working. It's moving a little bit funny at the moment, but don't worry. I'm gonna fight it through for you guys. All right. 24th somewhere. Just remove some of our other lines, which is what I want. I'm scared now to try and just remove the other lines. Let's go and let me pull up my objects. Objects. Tools, my charts. My objects. My object list. It's done it again. It's done it again. I've opened the object list and now it's behind the screen. I don't know why it does that. Sorry, let me delete that one more time. Yeah, sorry. I don't know why it's done that. It's done it again where the object list appears behind, it's a bug with MT5. I've experienced it a lot of times, all right? So I'm not going to do that again for whatever reason. It doesn't like the object list for today. Let me minimize everything apart from our trading view. And we're going to open up our MT5 again. And we're going to do this. Okay, and let's still go one more time. And I'm not going to open up the object list, but we're going back to the 24th, which we've already put a little arrow there, so that should help us. Well, 24th. Well, we thought we put an arrow there, but it's disappeared as well. Of course it is. And I think we're talking about here. All right, so let's go here, pop an arrow in here. Now, let's gather ourselves. So when we go down here, boom, a minute time frame, and go and see what's going. So on that minute time frame, I'm going to change my chart from candles to lines just to help my eyes to be able to see what's going on by clicking this and understanding to see it. I'm looking to see if we get our entry model. That's on our GU. 24th. Well, here we don't have a clean manipulation and on a 1 minute time frame in GU. No. Okay. Let's look at it for see get the right shoulder. So look at that right shoulder. Let's go to a 2 minute time frame and have a little look. It's not really lovely on a 2 minute time frame. So again, maybe this one to give us what we're looking for cleanly, yeah, as an entry model GU. Yeah. So let's do what we said we was gonna go and do. Let's look at EU and see whether that's gonna give us a better entry model. All right. So with EU, I'm also gonna go back to the 24th at that time. And you guys are not accustomed to necessarily seeing us navigate. Look, I want to erase everything off these charts, yeah. However, the fact that this keeps having this little bug where it's got all these little lines is where the object pop-up is popping up behind is why I'm not just deleting them at once. So bear with me with that. So we're going over here now to March 24th at around about the same time, which is about 10:20. About here, this spike in here, okay? 10:20 by the server, 8:20, by the time, okay, our UK time. So that's one thing you guys have to check for when you're trading, yeah, to know that you understand that server time is different. And we are trying to look in here to see if we can see, well, go on, yeah. Oh my God. And this is why MT5 does take a little getting used to. It's a little bit clunkier, etc. Obviously, we're trying to find a specific time, whereas in trading, I think there is a way we can do it, but in TradingView, we can just set that calendar date and we can just snap to it. Yeah. In MT5, it's not as simple. Okay. So here on a 2-minute time frame is where we're looking at, and from a 2-minute perspective on EU, still not great. Let's go to a 1 minute now, so don't annoy me. But there's a better 1 minute one in here. Still not beautiful because that right shoulder isn't really how I like to see it. I can't lie to you. Yeah. Let's look on a 3-minute. Let's look on our 5-minute. Still isn't beautiful. Let's look on our larger time frame, which is 15-minute. Still isn't how I'd like to see it. All right. So maybe both of these are not are telling us stories. I'm gonna go look at Dixie now, which is our source of truth. Yeah. It's our source of truth. So even though GU and EU might be where and are in, what is Dixie saying? Because ultimately we might get to the point where we say, you know what, we just didn't get in that trade because we didn't like it. Yeah, even though it was perfect and it looked like it was going to do certain things, we could get to a point where we just say because it didn't do what we thought it was going to go and do. So I'm looking at March 10:20 and I'm looking at the opposite energy. Yeah, so we're talking about around about here, at about 10:20, around this area here, which is we have an arrow here. We're looking at the similar energy. So that's on a 10-minute time frame. We're going to drop our time frame all the way down to let's go straight to 2 minutes and find it again. Now here, for me, we have got our Dixie making a manipulation W, correcting without violating that area and continuing out of it. Okay, let's see where there's a closure. That candle closed over here. Yeah, so for argument's sake, we could have entered a trade in here, entry here, stop below the last low, which we could turn around and say it was over here if we want to be really safe. Yeah, we could do that. We could say, yeah, we're gonna get in there. Yeah. Or let's go and look on a different time frame. Let's look at our 1 minute, which I'm gonna have to go and do my little scrolling again. 1 minute's not as clean. 1 minute is not as clean as going in here. Let's look at our 3-minute time frame. Not as clean. But what we do see here is after the market had a little manipulation here, and we're seeing what's going on, we can see when the market had a change of character and started making higher highs and higher lows after this low point here. Okay. That could have given us some sort of entry information. It's going to 5-minute. So only on the 1 minute is this. This one's a bit itchy, bit itchy and scratchy. Yeah. Now, how would I do with an itchy and scratchy scenario like that? So I wouldn't be in there full risk because we've got a 1 minute situation on our line chart that looks quite good. But when I look at it on the candles, it's not fantastic. Yeah. No, sorry, it was the 2 minute. It's not fantastic. Here we're saying, yep, we can see lovely how the market's come down here, made a W, ever so slight manipulation W based upon where the candles have closed, indicated, corrected without violating these lows, and then continued. Yeah. And on that basis, maybe I'll get in a smaller entry point. So that might give me that flag, that signal to say, okay, can't see it that clean on GU, but it's looking okay-ish across EU and the Dixie. Yeah. And that would have allowed us here, just going back to our back testing to say liquidity's been swept. and then we've taken that trade in the direction. And let's zoom in and understand. Let's imagine we did get in that trade. Remember, we're just back testing. The same way we're back testing, and I'm saying we could have gotten that trade. We could have turned around and said, you know what, we're not getting in that trade because we didn't like it. But either way, we still see the fundamentals of our liquidity being swept and the market pushing in the opposite direction towards next liquidity. Now, let's imagine you turn around and say that you're somebody who you'd like to trade New York sessions. That's what you're interested in, is trading New York sessions, because you're there in that time of the day, it suits your lifestyle, etc. You want to be able to find how you're going to trade a New York session, and back testing is going to give you that confidence. You're going to have to turn around and say back testing. Now, typically what we see with New York sessions is it's sweeping London levels, yeah? Sweeping London levels or tapping into points of interest before doing certain things. My points of interest are always going to be 50% of any type of impulses. They're always going to be imbalances. They're always going to be liquidity. Now, in this instance, we can see how New York pushed up and tapped into 50% of the previous session, which is London, and had huge wick rejection from that area, and then continued London's bearish energy. Yeah, pushing down here. I don't particularly trade London and New York session, but New York in trade session, I think, is more conducive to you trading your indice pairs. Yeah, because that's where you're going to get that real volume and movement happening. GU and EU trade them in London time in the morning, in my opinion. Yeah, that's my energy. That's what I do. Okay, so let's go back to looking at again another opportunity of what's typically trading our London session GU on the next day. Now this is Wednesday. On Wednesday, we've seen what? Liquidity being pushed out, taken here early. Now, what do I say about liquidity to being taken early? Does anybody know? What don't I like about liquidity when it's taken early?
The level's not strong, so it's a weakness. So
Yeah, and
meaning that the the market might flow in that direction.
not exactly. Somebody correct to what I say about markets taking liquidity early. What do I normally say about that? Somebody knows. What do I not like when markets take it early? Come out here and leak out of this session early before London.
Well, it likes to come back to 50%.
Not exactly. I'm not fit. That's not exactly what I'm fishing for. When this area here is leaked out early, what do I say? That happens, that I am always concerned about. That happens when the London session starts. Come and think. I know you guys know. And we've gone over it so many times. As soon as I say it, you can say, oh, yeah. Just think. If I saw this session being leaked out early, what do I think is going to happen in London? Which we can see has happened. That's the clue. We can see it's happened. Well, look, for the people in the back. The market comes and violates this low, because this becomes another point of liquidity that the markets already showed is soft, because before even London came to the table, it was able to violate, it was able to push out like this session and come down here. So London comes and goes, well, if this area is so easy for the little weaklings of Frankfurt to push down here, we're going to come and violate their low. So I typically would see this market take these lows, the way it's leaked out early. It's exactly what the market did. Zoop down in here. Yeah. Now I want to drop my time frame down to 1 minute again, but I'm gonna have the same headache going backwards and forwards. I'm gonna try. Let's see. I'm gonna try to drop to 1 minute and see where I've done those scribbles and see whether we're gonna be able to get the data. I hope we do. Yeah. Hope we do. I hope we do. We're going back to. Where have I done those scribbles? March. This is to April. Let's see our two lines. There you go. Oops.
So my understanding is that that level you said is obviously going to be violated. So you class that as liquidity, meaning that it's going to go in the opposite directions,
Yeah, it's going to
or it's
sweep that
going to
level. It's going to sweep that level and go in the opposite direction. Yeah, because
Okay.
depending on because look, remember, whenever we see the market leaked out early, I don't go straight away like, oh yeah, look, let's go back to the scribbles. Over here is where I did the scribbles. It's giving me 3 minute information. Cool. Let's just work off that. Whenever a market has leaked out of a session early before London, I think that that level in here is going to come and get violated again when London opens, as we can see that happened here. When London opened, it was going this, it wants to go this way, but I said, wait a minute, go back here and just give this little level over here, little slap, just to let them know that I am in charge. Market comes down here, violates that level, and then goes and have a look. Obviously, on a 3 minute time frame, you can see what we're going to see, but I'm telling you that on a larger time frame or a smaller time frame, there's a better entry. We can see the manipulation W here, a correction, and a continuation. Now, this market fails to take Asian session highs. Why? Because the overall momentum, as we identified before, is bearish. It's a
Yeah. And
bearish.
I think that's what I was trying to explain. And I
Mhm.
think sometimes when that happens, when it creeps out early, sometimes the 50% of the Asian range is normally a reference,
Yes.
as it always
Yes.
is. And then it
Yes.
comes back. Yeah.
So say for argument's sake here, we pull out our 50% of the Asian session range. We know that this market's going to violate early. So there's an opportunity here, trade on a 1 minute time frame or wherever. Let's imagine to get some sort of entry in here. And my target would be, because the overall market is bearish, 50% of that Asian session range. So as soon as that market comes and taps in there and I start to see it failing, yeah, which we can see over here, the market made a manipulation M at around the 50% level. Whoops. Around here. This is the end of my trade if I took this bullishly in here, and the start of my bearish trade if I'm able to. Yeah, so that start of that bearish trade might be the markets here come, indicated, corrected, and continued. And for argument's sake, maybe from that 50% level, we're going to take a trade from here. If I stop above the highs, and we're going to be taking this trade where to take the our lows of where the liquidity may be. So liquidity now is here below these lows. That would be our target to try and come back down here and take these lows. Yeah. Or a next session low. Now, in this instance, in this particular example, the market halfway through pushed down to a point of interest. Who knows what this point of interest is here? What point of interest is that for us? I'll give you a clue. PB. PB.
Previous battlefield.
The market comes down to a previous battlefield here and has a reaction. Now, unfortunately, from what I can see, that reaction might have stopped you out. Yeah? Let's have a look. Comes all the way down to this previous battlefield. That reaction comes all the way back up here and could have stopped you out. Now, by that time, your trade should have been risk-free, or maybe even you've taken your profits because you're happy with whatever it is. By this time, this market comes down here, we're at a 1 to 4 anyway. Yeah, we're at a 1 to 3.5, 1 to 4 anyway, potentially here. Okay, of that market making a correction and continuation, whether you're going to be in here, whether you're going to be above the last low. So potentially you've already made your money here, but it's come to a point of interest. So what have we said about our points of interest? Let's list them out verbally. We've got imbalances. Imbalances are magnets to price. Yeah. We've got liquidity. Liquidity are typically we want to see markets a target where the market's going to go to. And there are also a green, checkered flag of where they may take that liquidity and say, okay, our belly is full, now we can go in the opposite direction. We also have our points of interest, such as previous battlefields, yeah? Or everything that you see in here, when I go and I draw a line and I go into my options, daily highs, daily lows, liquidities, previous battlefields. That's what I'm interested in. And 50% of
Session.
Yeah, of impulses. Not even just sessions, impulses, because the market's moving waves, but yeah, sessions as well, but impulses still becomes a point of it. These are all my points of interest. So, therefore, this could be a successful trade based upon the fact that when you get to a point of interest, you've maybe you've moved your stop loss to entry and taken 50% of your trade. Yeah, remember the point of us trading is taking profits. So when we get to this previous battle, especially if we start to see the market failing, creating W's, changing characters. At that point in time is a great signal for us if I can go to my 1 minute, you'd see even more happening to say, you know what? I'm gonna take my profits because I'm already at 1 to 4 here, 1 to 3, cool. Now, what did we see in this instance? The market actually came all the way back up to here, this level again, and then decided it wanted to push down and take the liquidity lows. Yeah. Now we're either not in a trade no more because we made 1 to 3 for the day, or maybe we've stayed in this trade, took 50% off, and then the market's come and taken our stop. So we've only made 50% that trade. Either way, that's a winning trade for the day. This market came back up in here, potentially stopped you out. Yeah. Even if you placed a stop above the swing high, the way I'm looking at it, potentially stopped you out with these wicks and then came down. Is what it is. Let's go to our next day. So that's 2 days done. This is us back testing. Yeah. Here's Asia's session. Yeah. And this isn't one I prepared earlier, guys. I haven't been out here, marking this whole session out and going, we're just doing this live in the mix. Yeah, we're just looking at this live in the mix. Okay. So right here we can see Asian session framing what's going on. We can see that the markets are here, and then London doesn't take Asia high. It comes and it takes Asia low. And we understand the market is bearish. When the liquidity is taken from below Asia session low within London, I'm expecting there's an opportunity for me to take the trade after the liquidity swept in the opposite direction. And because the market is overall bearish, my point of interest for that trade of where the market might go is where? Somebody say it to me. Where might that trade go to? Bearing in mind it's a bearish market. It's going down the stairs like this. It's going down the stairs like this. So therefore, in this instance, because I don't control the market swept liquidity from below a previous session low. And I'm saying that there's a potential opportunity to take this trade from here. Where
Is that,
to?
I would say, is that the daily low?
Whatever it is, just on a general level, we swept this liquidity from here. Where is a potential target if we're taking this trade from here, finding some sort of entry in here? Where is a potential target for us? It's not going to be all the way up here by session highs of previous New York sessions because the market is overall bearish. So where is a safe
50%,
target
50%
of the
of
previous session?
50% of, yeah.
So once again, that would be a target. So on a smaller time frame, we may have been looking for our entry because we're day traders on the 1 minute. I didn't see what the date was. So I'm guessing it's probably back around here. Let's have a look. Let me go back to where those little lines are. It was the 24th. Why isn't this saved? Is the 24th? 24th of March, probably about the 25th now. 26th, maybe. Let's go and look over there. Go to that area. Where's my scribbles? No, it's not giving me the date on the 1 minute time frame, unfortunately. But it will give it to me on the 3 minute. So let's check it on the 3 minute. All right. So at that point here, when this liquidity has been swept, we're looking for an entry potentially in London session to at least 50%. When we get to 50%, we have the capabilities to then say we can get in with the trend and trade it to our next level of liquidity, taking session lows, taking London session lows, or where did we go? The previous level of liquidity. If we go and look left and see where there's levels of liquidity, yeah, or when the market moves against us. So we might have taken this to this previous low here and held until the market starts to fail. So best case scenario, the market starts failing over here, giving us change of character, then we might say we're out. But that is we're doing that because unfortunately or fortunately, the market took liquidity first from below. If the market took liquidity first from above, then we could immediately get into the sell in line with the overall trend. But in this instance, it didn't. It took from below, giving us an opportunity to trade to at least 50% of this session. Remember, it could have gone straight past there and actually taken the liquidity from above as well. Could have. But this is our first target as traders because the overall market direction that we saw in the 1 hour and the 4 hour is bearish. Let's go again to the next day. So that's one trade in here. And then from here, if we was to zoom in, which I can't get lower than a 3-minute time frame, but we can see a manipulation M right at 50%. The market correcting, the market continuing, and we could have turned around and said, all right, cool. Now we're going to get in line with the trend, and we're now in another trade, either aggressively above the last high or placing our stop above the swing high at the 50% level. And then we're taking it down to the next point of liquidity or structure, as Juice said earlier. Yeah, or structure. And the structure would be, if we want to be safe, there's a previous swing low here. If we were going for other structure, we can look back here in the past, which I can't get the data, and we can outline with some nice lines where there's other liquidity levels. And we could trail our stop. And then when we see the market breaking against us on whatever time frame we're comfortable with, so when we start seeing on 1 minute time frame change of characters or 3-minute time frame or 5-minute time frames, we can say, you know what? I'm out, and I'm going to take my trade here. Maybe I missed out on a little bit of profits here, but the market's starting to change against me, breaking previous highs. I'm going to take my money. That's another 2 successful trades there. Yeah, let's go back some more. We're just back testing. Here's Asian session again. Asian session is going to present us a range of where we can see what's going on. This is our Asian session highs over here. Let me try and, I don't know why there's so many lines on my chart. Let me try and delete everything. A bit better. So if we go over here, this is Asian session high. All right. I'm going to make it a solid line just so you can see it. Remember, I'm using a slightly different indicator. That's why everything's a little bit weird looking. All right. And Asian session lows. Now we've seen here the market come up here early before London opens and didn't really take those highs. The market then, London opened and from 50% continued to push down. At this point, we could have been looking for our indication correction continuation to take this at least to 50% of the Asian session range, but we never got it. We didn't get it. The market actually just continued pushing down because maybe it was searching out some other liquidity. So say for argument's sake, let me try and put a stiff vertical line here and let me make it a color so I can remember it. Maybe we was going for a previous daily low. So let's go and see where that thick white line is that I just put in. Let's go and see where it is here. And let's go and identify where it is the previous daily lows are on that. All right. I can't even recall what day it was. I didn't look, but let's say it might have been here. Oh, it might have been here. I don't know which one it is, but let's make this a white daily low line, and we'll see when we zoom back in. Daily low, because it's my fault. I didn't clock what day it was. Daily low. It's because we're back testing here, guys. So obviously we're doing things a little bit backwards sometimes. All right, so let's go to that thick yellow line that I put in somewhere because we're going systematically day by day, just picking a completely random section. It's actually not random, a section of the market whereby market started making lower lows and lower highs, which happens to be the 24th, around about the 24th. In here, where's my, is that the thick line I made? I think that must be yeah, that's the thick line I drew. So at that point in time when we was looking at it, yes, we're here. We said that the market just keep pushing down. Maybe the market was pursuing something else, but in this instance, we haven't got in a trade. Yeah, so Friday, which we don't know, maybe there's other news, maybe there's FOMC, maybe there's a thing. This market didn't do within our strategy what we wanted it to do, what we thought it was going to do. It just kept pushing down, and we didn't get into that trade, even though it kept pushing. And is what it is. New York opened here. New York did what? Within our strategy, what did New York do? Just looking at it here, I'm going to help you out with a little clue. Imagine that we was here for London, didn't do what we wanted it to do, so we didn't take any trade in London. But what did New York do based upon what I've just drawn on the screen? Based upon what I just drew on the screen, what did New York do that London didn't do to allow us to get in? Well, New York pushed up to 50% of that Asian session, which we say is a wall, and it had its reaction from there. Yeah, so maybe, not that I'm trading it in London, maybe that if I saw an indication correction continuation, that pattern changing in here, maybe I'd be saying, well, it's respected 50% of the Asian session, what London didn't, just kept trickling. And maybe this is going to give me some sort of sign if I drop my time frame down, which I'm not going to do because it's going to annoy me because it's not going to give me the 1 minute. It might do as it goes. We move the day on. Maybe it does. Let's see. Maybe it does give it to me. Let's see. Maybe it does give it to me because we moved on a little bit. Maybe it does give it to me. Hopefully it does give it to me. Because we moved a few days on. Is this it? Is this the 50? Did I just pull out there the 50%? Oh, it's here. There we go. Is that it? I don't even know if that's it. I should have noted the date again. So it's my bad, my mistake. So in here, let's see what date that is. That is Friday the 27th, and then that is Friday the 27th, New York Open. So let's go and have a look at Friday the 27th, New York Open, Friday 27th, around about 2:30. No, it's not giving it to me in a 1 minute time frame. Yeah, it's not giving it to me in a 1 minute time frame, as I thought. That's fine. Let's look at it on a 3 minute time frame, which is, we're here. And, maybe if I was trading New York session, I'd see the market come up, give me some sort of rejection, some sort of change of character here at 50% of the Asian session, which is within that yellow box. And maybe there's some sort of entry model there. Let's have a look on a 3 minute time frame. Yeah, maybe I can see a 3 minute manipulation M. It's not great. The market tapping back in here with a little bit of a wick and continuing fine. But either way, we're not necessarily taking the GU trades in New York, but I'm just saying you see how it respected that same point of interest, 50%. So we didn't take a trade in London session on Friday, but in New York session, it gave us what we want. Let's move on again. More back testing. Yeah. All right. So we're here now on this note the day this time, 26th of March on Monday. We know the market's Monday madness. But once again, Asia frames what's going on. So we've seen Asia's high here. We've seen Asia low. And the market leaked out early. So I'm thinking to myself, if I see the market leaking out early, maybe this market's going to come back and violate these highs. Yeah? They haven't violated these highs. And once again, just like what happened on Friday, that bearish momentum just continued. So we see London opened here, just continued with bearish momentum. Hello, son. Yeah. And just continue with bearish momentum. We saw the liquidity taken from below Asian session lows over here. And we did see a reaction that pushed up. Let's have a look. Back to our 50% of the Asian session here. And then the market had to change itself. Once I saw the market take this liquidity here, take this liquidity here, there may have been a potential entry here. It looks a bit bitty to me, but to our point of interest once again, which is around 50% of the Asian session. Tapped in, and at that point in time, when I see it tapped in, I'd be looking for some change of character here that potentially maybe that market might continue. Now, I can't see it cleanly here on a 3 minute. I can't lie to you. It's just wicked in here. But I would be thinking to myself too, that market's going to be going in this direction for the way it rejected from our point of interest, 50%. Because the market's bearish. How do you understand that as a very simple logic? It's like a ball falling down the stairs. You've never seen a ball do this. and then come to the next step and then bounce up higher than where it's come to. It doesn't happen in physics. Yeah, but it's very possible it could bounce up, 50% and ever so slightly. And as here's even better than that, as the momentum comes out of it, that bounce gets less and less and less until someone's got to pick it up and bounce it again. Yeah, similar to how the markets move. Yeah, very similar. You might see it not come up to 50% now. It might just make another little one and then another one, and then maybe it gets to a point where now buyers come in the market. Yeah, so maybe we got in here in London. This is still London session now, but it just wasn't early. After the market came back in here, and somehow we saw some entry model, and somehow we sold it down, and we waited to see what happened with New York. New York continued that momentum, and we're really happy because New York pushed all the way down here and took some liquidity from below a level, which is a point of interest, or tapped into an imbalance, which is a point of interest, or hit our minimum requirement that we want, 1 to 3, 1 to 4, 1 to 5, 1 to 2, whatever it may be, and we're out of the trade. Because then in New York, the market starts to consolidate and do nothing. Yeah? Let's look over here. Asia session. We're here in Asia session, and this is the next day now. This is Tuesday. We're going through every single day. We're going to do one more because it's 20 past now. And then we're going to go and look at some news, fundamentals, ask Brother Alan what's going on in the world. But if we see right here, we're now on Tuesday. I don't know what news has been happening these days also, guys. I'm not going back and looking at news. That's part of our strategy to understand what's happening in news. But here is our levels of Asia session. Now we can see that London is here, or the market's consolidating, accumulating right on our 50% level of Asia session. That's the wall. That's our point of interest. There's a wall here that this market has been sitting on. So we're sitting here watching, seeing where the liquidity is going to be taken. So London's open now and the market's still dancing around. Now, would I be getting in here from this 50% for a buy from here? No. Because there's nothing to show me that this market's doing anything. It hasn't even manipulated out of this little accumulation. If for some reason you said that this was accumulation. So we can't even do that. I'm waiting for liquidity to be taken from somewhere because that's my rules. So we can see here the market takes Asia session liquidity here and continues pushing up. I'm waiting for the market to change direction. Give me an indication, correction, continuation, which we can potentially see in this instance happens in New York. Yeah, if I go to my daily level, let's remember this date, Tuesday, the 31st of March. Let's put that in here. Tuesday, 31st. Why isn't it going in there? 31st of March. Tuesday, 31st of March when New York opened here. Let's see if on a smaller time frame we're getting what we need to see. All right. So I'm looking at it on a 5-minute time frame first, which is larger than that. And let's look at it, see if it gives us our 1 minute, please. Let's see if we get our 1 minute information. Yeah, have a look. We're getting it. What can we see? We can see a beautiful manipulation M in New York session and the market tapping back into that and continuing. And for argument's sake, we could have been in this trade like so. We'll stop above the high in New York based upon this is the change of character coming from after the liquidity has been swept from Asian session. So this is all London session. All they said is London, 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 London. This is the crossover between London and New York. And then we saw the market changing character for us. Yeah, within New York, when we know volumes coming in the market. So it never happened in London. And maybe we didn't even bother with it because it didn't happen in London and we're just seeing it mucking around here. All these little M's that we can see, we can't see any correct continuation without it violating the highs. But when New York started and made a big manipulation M, tapped back in and corrected below here, and maybe we got in that trade. Where to? To our points of interest, which are liquidity, imbalances, or 50% of previous sessions. Liquidity was sitting in that New York session below London session and at 50% of the Asian session, which happens to be both of them. This line happens to be true for both of them. So that could have been our target. That's Tuesday. We'll do one more. Here's Wednesday. All right, let me try and delete everything off our charts. Wednesday. Asian session here is free. I don't know why this is. Let me take off some of these indicators. Take off this. And let's put on our old indicator here. Asian session is framing what's going on. And at that point, we're looking what's going on, We're waiting to see whether or not now the market's kind of changed now. Yeah, let's go and look. Let's have a look on a 4-hour time frame. Where's my 2 yellow lines? Oh, I deleted everything off the charts, unfortunately. I deleted everything off the charts, unfortunately. But we want to see, obviously, what the overall momentum is of the markets. And now I don't know where we are. So we're not going to do that last one. All right. But back testing is very, very important. It's something I want you guys all to do. If you're not back testing, it's very difficult to get confidence live in the market. Why? Because some days our strategy doesn't work, or some days you make a mistake. And at that point in time, you go, this doesn't work. Let me go and find another strategy. Let me go listen to this other guy on Instagram because he's saying everything he does is passing all of the challenges, passing FTMO challenges, and making him hundreds of thousands of pounds in the markets. And you say, okay, well, maybe he's got the secret. It doesn't work like that. No one's got the secret. You've just got a strategy that if you stick to it over time and you're religiously, that it will pay dividends. You have said to me openly that you know why you blew your challenges. Because you didn't do this, you didn't do that, you over leveraged. You've told me that without me asking. So let's at least try and iron out those problems. And once we iron out those problems and we backtest and we've been I'm sorry, not we backtest, we iron out those problems and we've been religiously sticking to our strategy, then if the strategy is dog mess and it doesn't work, by all means, go and find a different strategy. But you're not going to get success in trading by hop, skip, and jumping from strategy to strategy to strategy. It's only going to have you exhausted because the one time, this is Sod's Law, the one time you hop to another strategy is the time when that strategy was losing for, the 4 times out of 10 because it's got a 60% win ratio. That's the one time you hop to the other strategy. Then that one doesn't work. You hop to another one. Sod's law is that other one's got a 50% win ratio or 60% win ratio. The 4 times it lost is the 4 times you took that new strategy. That one doesn't work. This is why you cannot hop from strategy to strategy because there will be times when it doesn't work. Even your favorite for example, let me show you this. For example, there is a trader and his name's called Trader by Sai, I think his name is. Trader by Sai. I'll show you who he is. I don't know if you guys have seen, he's got tattoos on his face. Have you ever seen this guy? Has anybody ever seen this guy? Trader by Sai, I think his name is. This guy here. Have anyone seen this guy? He's a trader. Has anyone seen this guy? He's got a big chain, sorry, he's saying NASDAQ. Yes, no? Anybody, you with me? I don't know if anyone's seen
No,
this.
I've not seen this guy.
Trader by Sai. I've seen him. Yeah, I've actually watched a couple of his videos, etc. Blah, 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 blah. Now, Trader by Sai gets a lot of momentum. Why? Because he's going to post up that he's 1.2 million in profit in NASDAQ. He's going to post his profits. This is my live account. Here you can see I'm 1.2 million. Here you can see I'm 4 million in profits in NAS. Yeah. Now, I get it. Because if you're a trader and this guy's 4 million in profits, you want to know what he's doing. But he's not 4 million in profits by taking a trade that he risked £100 for. Because when I went over one of his trades that he said he's 1.2 million in profit, it was a free, and he had his stop loss because he said, there's my entry. I could see he posted the chart. I put his stop loss in. I put his entry in, and he had 50 lots he's taken. He's taken 50 lots. 1 second, guys. Give me a second. Give me a split second. Sorry, I'm back. Yeah, I was just saying that he was taking he's taking the trade, and when I put his stop and I'll try and find it and we'll go through it. His stop in his entry and 50 lots at a time, and he's taken 2 50-lot entries. 50 lots. Yeah. Sorry, in gold. Yeah. 50 lots. His risk was a $360,000 risk. 360 that he posts his losses. Just lost 4 million, just lost 7 million, just lost 9 million, but I'm 20 million float. Like the reality is that's a 1 to 3 trade. Yes, he's posting 1.2 million pounds in profits, which is definitely going to catch your attention. But it's a 1 to 3 trade. He's got a 350, this is rounded up, £1,000 or dollar stop loss. So the point I'm trying to paint to you is just because you don't have an account size, the size of this, who knows why his account size is that big, whether he's telling the truth, lying, made money from somewhere else, who knows? Let's just forget about it. Let's just pretend that's an X we don't know about. Yeah. But when he's posting 1.2 million and he's getting bare eyes on it because you've been blowing your £150 account, £250 account, let me ask you a question. If you had a £250 account, or let's just even make it bigger than that. You put £1,000 into account and you take a £10 trade, are you posting your profits when you make £30? Are you over the moon feeling like a boss, like you've killed the game when you've made £30? Possibly not. But this guy has essentially taken the exact same trade as you, but he's on a complete different wave, showing his big chain and his yachts and whatever, or his holiday or whatever he's doing. But he's taking the same trade as you. So the point I'm making to you guys is nobody knows whether or not how this guy has got an account size whereby he can take £350,000 losses. Nobody knows. Maybe this guy in this picture here is a hedge fund manager and has allowed him access to, I don't know, 100 million quid because he's shown he can trade. I don't know. You don't know. But do not get caught up by the end results. Get caught up by the process because he also takes losing trades and will show you, yeah, I just lost 4 million here. I've just lost 2 million in this thing. But now he also does that. Nobody cares because at certain times he's going to show him 9 million in profit in gold. Yeah. So
Motion detected.
trust the process. And he's a big advocate of having a live account, not trading prop firms. But there are other guys who are big advocates of trading prop firms accounts and leveraging their money. The only issue we have with prop firm accounts is some of the rules and the fact that they can, stop you out and do a madness whenever they feel like it. But let me say something. What I'm leaning towards in prop firm accounts, guys, is prop firm futures accounts. Because there are a lot of prop firm futures accounts. You can pass your challenge just if you just make, I think it's like 6% is an immediate pass of your challenge. But they have a different rule where they have a floating drawdown. What that floating drawdown means is if you go up 2 grand and then that 2 grand comes and stops you for stop loss, they take that 2 grand high to 0 as you've just lost. Let's imagine you had a 100k account. That's a 2%. That could no 100k account. Let's make it a 50k account. That 2k drop from 2k to 0 could blow your account, even though you was in profit. Does that make sense? Do you understand what I just said? If you're getting a trade here and it's a fantastic trade, it's going up by 2, and you're £2,000 up, and then it drops by £2,000, that £2,000 they see it as drawdown, which is something you have to understand if you get involved in a prop firm account like that. Some Forex companies do it as well, because that will blow your account, even though you never ever went in minus.
You would really have to, as soon as you get up, like keep moving your stop loss to like 50% of your profits.
There you go. You have to keep moving your stop. 100%. I'm glad you said that straight away. It shows me that you know what I've got. You can't afford for that market to drop down below a certain level. You have to keep moving your stop, which maybe is a way that they secure themselves, that you don't just smash a market in 2 with 1 trade. Maybe that's what they do. Yeah. Guys, news. Let's quickly go into news and let's finish up. Yeah.
Grand Rising all. How's everybody?
Yes, my brother. Yeah, bless, man. How are you, bro?
Not too bad, not too bad, not too bad. So I've been in the office. Just need to show my face, you know. Listen, you've seen what's been going on in the last few days. The last month, shall I say, the market's been very volatile. There's people making big money out there. But there's also people blowing accounts because the market's just done a flip-flop. This war, this peace is not going to hold, it looks like. The market is waiting for signs. However, there's a lot of red folder news today. But the market, yes, they had some positive news. As you can see, the Nasdaq went up by over 1,000 points from yesterday morning, early morning, because of the peace kind of 2 week peace deal, ceasefire. Yeah. But yeah, this is not going to hold. The market wants to go up. Yeah, the market, especially indices, they want to go up. However, yeah, there's too many nuances in this, you know. Just to be kind of straight with you all. Before the war, there was no toll to the Strait of Hormuz, and it was not controlled by either Oman or Iran. Now this war, there's control. So this war was a waste of time. Yeah.
Yes. I was watching something all about that, basically
Yeah.
saying he's achieved absolutely nothing. In fact, what he's done is he replaced a leader who he had a problem with for now a leader he's now got a bigger problem with because he killed his dad.
Yeah.
Yeah.
And his wife and his child.
And his wife and his child. And like you said about the tolls, 100%, that's what's happened in regards to the tolls. Now there's
Yeah.
tolls and now there's control, Iran having control over those markets.
Yeah.
So yeah, effectively, what has he achieved?
Nothing. That's what happens when a man who, this man has bankrupted a casino. Who does that? Yeah, that tells you everything about this guy. Anyway, today, listen, just be wary, everyone, when you trade. It is very volatile out here. I said this before. We've got a lot of red folder news, but the most important news is what's going on in the Middle East at the moment. There are people on both sides who do not want peace. As you can see, the Israelis are doing their madness and hitting Lebanon with everything they've got. To be fair, there needs to be peace everywhere. Unfortunately, it's very volatile out here, and the market is just a bit concerned. As I said today, there's a lot of red folder news at 1:30, GDP news, PCE news, but I reiterate, the market is looking in the Middle East because the oil situation is grave. As you know, or when you're going to put petrol in your tank, it seems to be going up 2 to 3 pence every day. Which is a direct result of what's going on in the Middle East. How bad things could get if this continues, we can have empty stocks on shelves, and it can be worse than the COVID era where people are doing the madness, buying everything they can get, and there's nothing on the shelves and so on and so forth. And then there can be, the price rises for the electricity and gas, which is coming in June or July, I believe. And it's going to be the price rises are going to be huge. People can't afford it. The poor will get hit as always. So yeah, watch that space. But yeah, keep your eyes on what's going on. I believe that there's a few people who got Truth Social accounts watching what this man does. Yeah, it's very volatile out here, everybody. And trading flip-flops. If you catch a move, fantastic. If you on the other side, I hope you got your stop loss. But it's very wild. Any questions, anyone?
No, it's very, very powerful question. Things that you're saying there. I think what we see for your trading is like this: be risk off, guys. Take trade and be risk off at the moment. In regards to, you don't have to be at 1%. You can be at 0.5% and take what you're given. Be happy with what you're given because the market is a bit volatile. And yes, you might get lucky; it spikes in your direction. Like if you held your GU position overnight for a buy, you would have seen that spike that happened of the US dollar losing strength, overnight, and that market, giving you giving you a great push or whatever it may be. And yeah, you might have got lucky like that, but be risk off and take your profits. Remember, there's different seasons to trading. Yeah, and tapping into what Al's just said about how bad things can get. This guy is is a new CEO of Diary of a CEO, and it's exactly what he says. He says in 3 months we'll enter a famine. It says financial crash expert, in 3 months we'll enter a famine if Iran doesn't surrender. It's the end. Yeah, so that was similar to what you were just saying about, we're going to see potential shortages and certain things like that. And I think we can watch this and take this in. This might be a good insight into what's going on. But from a trading perspective, guys, you guys, you know the strategies. Yeah, you know what it is. It's not every single day we're gonna see what we want. If we want to see other things every single day, we add on more power plays. But we don't, what the point is this: you don't need 10 power plays. You don't need to take a trade every single day. You might take 2 trades a week. Yeah, and that would be great trading. When your account gets bigger, you may take 4 or 5 trades a month. That is how you're supposed. It's not supposed to be a game. It's supposed to be business. Do you understand what I'm saying? Yeah. So therefore, you're looking for what you look for. If you do not see what you look for, do not tell me you are in a trade, because you are means that you have no rules. That's all it means. I don't care if that trade goes well. Why was you in that trade if your rules are that you're waiting for it to sweep liquidity and do this? Why did you not take some of your profits off the table when you hit 50% of at your point of interest? Why did you not, these are the things that you have to, it's easier said than done. But I'm telling you, this is where I need you guys all to be at. But guys, amazing day. Thank you so much, Al. Thank you that's there. We're gonna watch this talking about, it's a Diary of a CEO talking about famine. Yeah. And let's see what this supposed financial crash expert says, that in just 3 months we'll enter a famine. Guys, have an amazing day. Let me stop the recording. Thank you for everybody that's been here. Remember,